the escrow account overcharge costing homeowners $1,200 per year. Your mortgage lender collects money every month for property taxes and homeowners insurance through an escrow account. You assume they're calculating it correctly. But what if I told you that escrow accounts are routinely overfunded by $100 to $200 per month, tying up $1,200 to $2,400 of your money interest-free for the bank? Even worse, many lenders miscalculate escrow payments, causing surprise payment increases or shortages that cost you hundreds in cushion fees. I'm about to show you how to audit your escrow account, catch overcharges, and potentially eliminate escrow entirely to save thousands. What an escrow account actually is. When you have a mortgage, your lender typically requires an escrow account for property taxes and homeowners insurance. Instead of you paying these bills directly, the lender estimates your annual property tax and insurance costs, divides by 12 to get a monthly escrow payment, adds that to your mortgage principal and interest payment, holds the money in an escrow account, pays your tax and insurance bills when they're due. The lender is legally allowed to keep a cushion of up to 2 months' worth of escrow payments in the account as a buffer against increases or shortages. On a $4,000 annual tax bill plus $2,000 insurance, that's $6,000 total divided by 12 equals $500 monthly. The lender can keep an extra $1,000 cushion in the account. That $1,000 is your money, earning zero interest, held by the bank. Why escrow accounts get overfunded. Lenders routinely pad escrow accounts beyond the legal maximum because they overestimate tax and insurance increases. They assume your taxes will go up 10% when they only increase 3%. They miscalculate the cushion. Federal law allows a 2-month cushion, but lenders sometimes calculate it incorrectly and hold 3 to 4 months. They don't update after you successfully appeal property taxes. If you appeal and lower your assessment, the lender often doesn't adjust your escrow payment for months. They keep collecting the same amount after insurance premiums decrease. When you shop for cheaper insurance, they're slow to adjust your monthly payment. The result? You're paying $150 to $200 more per month than necessary, and the bank holds $1,500 to $2,500 of your money interest-free. How to audit your escrow account. You can request an escrow analysis from your lender at any time, but here's how to audit it yourself. Step 1. Get your escrow statement. Your lender sends an annual escrow analysis, usually around the anniversary of your loan closing. You can also download it anytime from your mortgage servicer's website. Step 2. Check actual tax and insurance costs. Look at your actual property tax bill and your current homeowner's insurance premium. Add them together. Example: property tax, $4,200 annually. Insurance, $1,800 annually. Total, $6,000 annually. Step 3. Calculate required monthly payment. Divide total annual costs by 12. $6,000 divided by 12 equals $500 per month. Step 4. Check the cushion. The lender can hold up to 2 months of escrow payments as a cushion. In this example, $500 times 2 equals $1,000 maximum cushion. Step 5. Check your actual escrow balance. Look at your current escrow account balance on your mortgage statement. If it's over $1,000 above the required minimum, you're overfunded. Step 6. Compare your monthly payment to the required amount. If you're paying $600 per month into escrow but only need $500 plus cushion, you're overpaying by $100 per month. Real example: $1,680 annual overpayment. My neighbor Jake had been paying $650 a month into escrow for 3 years. His annual taxes were $5,400 and insurance was $1,800. total $7,200 annually. Required monthly payment, $7,200 divided by 12 equals $600. Allowed cushion, $600 times 2 equals $1,200. His actual escrow balance, $3,800. He was overfunded by $2,600 beyond the allowed cushion, and he was paying $50 per month more than required. We contacted his lender, showed them the calculations, and demanded an escrow refund check for the excess plus a reduction in monthly payment. 4 weeks later, he received a $2,600 refund check, and his payment dropped from $650 to $600 monthly. Annual savings going forward, $600. Plus, he got $2,600 back that had been sitting there for years earning nothing. How to request an escrow refund. If your escrow account is overfunded, here's how to get your money back. Step 1. Document the overfunding. Calculate exactly how much you're overfunded using the audit method above. Write it down clearly with supporting documents, tax bills, insurance declarations page. Step 2. Call your mortgage servicer. Ask to speak to the escrow department. Explain that your account is overfunded beyond the legal cushion and you're requesting a refund. Step 3. Submit a written request. Follow up the phone call with a written request via email or certified mail. Include your calculations and copies of your tax and insurance bills. Step 4. Reference federal law. Cite the Real Estate Settlement Procedures Act, RESPA, which limits escrow cushions to 2 months. Tell them your account exceeds this limit. Step 5. Request monthly payment adjustment. Ask them to also adjust your monthly escrow payment going forward to reflect actual costs plus the legal cushion only. Most servicers will process the refund within 30 to 45 days once you provide documentation. When you can eliminate escrow entirely. In many cases, you can eliminate escrow and pay property taxes and insurance directly yourself. This gives you full control and lets you earn interest on the money until bills are due. You can eliminate escrow if you have at least 20% equity in your home, 80% loan-to-value ratio or lower. Your loan isn't FHA or USDA. These usually require escrow. Your lender allows escrow waivers. Most conventional loans do. You're willing to pay taxes and insurance directly when due. Benefits of eliminating escrow. You control when and how you pay, can put money in high-yield savings until due. No more surprise escrow shortages or cushion requirements. You earn 4% to 5% interest on money until bills are due. More transparency. You see exactly what you're paying. Risks of eliminating escrow. You must be disciplined to save for tax and insurance bills. If you forget to pay, you could lose your home, tax lien, or coverage, insurance lapse. For disciplined people with good cash management, eliminating escrow saves money and provides control. How to remove escrow from your mortgage. Step 1. Check your loan-to-value ratio. If you have at least 20% equity, your home is worth significantly more than you owe, you likely qualify. Step 2. Contact your loan servicer. Request an escrow waiver form. Some lenders charge a one-time fee of $250 to $500 to remove escrow. Others do it for free. Step 3. Submit the waiver request. Fill out the form and submit it with any required documentation. Proof of homeowners insurance, for example. Step 4. Set up separate savings for taxes and insurance. Open a high-yield savings account, specifically for tax and insurance bills. Automate monthly transfers so the money is there when bills arrive. Step 5. Mark payment due dates on your calendar. Property taxes are usually due twice yearly. Insurance is typically annual. Set reminders 30 days before each due date. Once escrow is removed, your monthly mortgage payment drops by the escrow portion. You're responsible for paying taxes and insurance directly. the interest you're losing. Let's calculate the opportunity cost of escrow accounts. Example: annual taxes, $6,000. Annual insurance, $2,000. Total $8,000 annually. With escrow, you pay $667 per month starting in month 1. Average escrow balance throughout the year, $4,000. Interest earned on that balance at 0%, $0. Without escrow paying yourself, you deposit $667 a month into high-yield savings at 4.5%. You pay the $8,000 in bills when due, taxes twice yearly, insurance once yearly. Interest earned over the year, approximately $180. That's $180 per year you're losing by having money sit in escrow versus earning interest in your own account. Over 30 years, that's $5,400 in lost interest, not accounting for compounding or larger balances as taxes increase. Common escrow problems. Problem 1. Surprise payment increases. Your escrow payment suddenly jumps $100 per month because the lender projected increases that may not happen. They overshoot and your account becomes overfunded. Problem 2. Escrow shortages. The opposite problem. They underestimated and now you owe a lump sum to bring the account current. This is often due to tax increases or insurance premium jumps. Problem 3. Slow adjustments after changes. You appeal property taxes successfully and save $1,200 annually. The lender takes 6 to 12 months to adjust your escrow payment, meanwhile overcharging you $100 a month. Problem 4. Paying someone else's taxes. Rare but happens. The servicer pays the wrong property's taxes and then tries to collect from you. Always verify your tax payments hit the correct property. Pull your most recent escrow statement from your mortgage servicer's website or request one by phone. Gather your actual property tax bill and homeowners insurance declarations page showing your current premium. Calculate your required monthly escrow payment and compare it to what you're actually paying. Check your current escrow balance. If it's more than 2 months of payments above the minimum required, you're overfunded. If you're overfunded by more than $1,000, contact your servicer immediately to request a refund and payment adjustment. If you have 20% plus equity, research whether you can eliminate escrow entirely and start earning interest on your money. That's all for today. If you found this valuable, hit that like button, subscribe, and ring the notification bell. I drop new finance strategies every week that most creators won't tell you about. Also visit Own Your Finance blog for more in-depth financial tips and hacks, whether it's mortgage optimization, homeownership strategies, money management, and more. Don't forget to download my free guide, Finally Break Free from Living Paycheck to Paycheck, the simple 10-step budget that actually works, and start building real wealth today. Both links are in the About section. Don't miss it. Thanks for watching, and have a great day.